Joining us now, we've got David Nelson, Chief Strategist, Bell Point Asset Management, to talk airlines. Delta, the first to release quarterly results. They beat on both the top and bottom line, reporting 46 cents a share, revenue topping 14 billion. But again, they had lowered guidance ahead of this. One of the things that was notable, they also suspended guidance. Tell me about your reaction to the latest results, David.
Well, Diane, they stepped over a lowered bar, like you said, and the fact that they're not giving guidance, that's what we're going to be hearing, for the next several weeks. We have, banks are starting to report at the end of the week. I think just about every CEO is going to give either tepid guidance or no guidance at all. That's probably going to be the playbook here. Look, Delta is doing the things that it can do in this environment. When they pre-announced last month, that was really already an indication that the consumer was starting to weaken, even before all the tariff news started to hit. So I think we're going to get more of the same in the coming weeks.
More of the same in the coming weeks. So, in other words, the expectation is that this is now a template that Delta Airlines putting forward, pulling its guidance for the balance of the year. Is that your expectation then for the rest of the airliners?
I think so. I think for CEOs and management, it's a get out of jail free card. They don't have to give guidance because nobody's expecting any. I'm certainly not expecting any. I look at a company like Delta, and there's obviously a lot of bad news priced into this stock. It's given back, probably about half of all the gains it made off the COVID lows in here. So I would caution investors, just remember, airlines are a trade. They're not an investment. They're hostage to geopolitics, they're hostage to fuel prices, and they're hostage to a very fickle consumer. So you can make a lot of money in airlines off the short run, but eventually they make all the same mistakes. At some point when things are better, they'll buy back a lot of stock and not save any for a rainy day.
No, that's fair. That's, I think, how a lot of analysts look at it. But for Delta Airlines, look, that has been a stalwart, similar, it didn't perform as well, for instance, as United did last year, but it has been a leader. And then in the most recent quarter, traffic was up, capacity was up. So those are positives. And although crude oil prices are moving lower, kind of off of worries about a recession, that does bode well for fuel prices for the airliners, right, David?
It certainly is. It's a key input cost, and lower fuel prices, go right to the bottom line. I think probably the thing that concerns me the most about the industry is, we're going to have to start looking at debt.
Okay.
Delta has a pretty significant debt load compared to other industrials, but compared to most airlines, it's in pretty good shape. I would look at a company like American, very challenged, very challenged. Okay. About a $6 billion market cap with a significant amount of debt, 2 to 3, 4 times levered.
And then what affects their ability to service that debt? Let me ask you this. You talked about kind of CEO views. JP Morgan Chase CEO Jamie Dimon in an interview with on Fox Business this morning saying increasing recession risk odds. He said, quote, I think probably that's a likely outcome because markets, when you see a 2,000-point decline, speaking of the DAL, it sort of feeds on itself. It makes you feel like you're losing money in 401k, you're losing money in your pension, you've got to cut back. What do you say in response? Are you expecting to hear more CEOs speak that way, David?
I think we will. Look, the wealth effect goes away, and it affects consumer sentiment. It affects consumer behavior. If you feel that you're worth less on any given day, you're probably going to spend a little bit less. So I think that translates even for CEOs with what they're doing. If they're a little bit uncertain about the environment, that capital project that they were going to do, maybe they'll just wait. And I think a lot of CEOs are going to wait to see how this all plays out before they make some significant decisions.
Okay, so certainly expecting to see some moving to the sidelines and being patient to see how everything plays out, especially when we've got these massive tariffs in front of us, particularly as it relates to the U.S. and China. All right, David, great insight. Appreciate perspective on Delta Airlines and beyond. That's David Nelson, Chief Strategist, Bell Point Asset Management. You got it, David.